I stood on stage last year and I said, we're all going to have a victory dance, and I was going to dare you to do one. Did everybody prepare? Did anybody take me seriously? Yes, I see some people. I want to do a victory dance now. Everybody ready? Jump back. Keith Fitz-Gerald. Stand. That is why I invest. Well done to everyone. Thank you so much for being here. Kim, thank you for having me back. I mean, it's been 20 years. Can't even believe this is my 20th anniversary year here at the Money Show. So thank you for putting up with me. I appreciate it. And with that, I'm done. See you later. We got to do the thing. We got any lawyers in here? A few? Okay, we can overcome that. It's your money, your responsibility. I'm here to educate, share perspective, and all drinks are free until the cart goes away. All right. Times have never been tough for individual investors. Fair statement? Yes, no? It's confusing, right? I mean, the headlines really are confusing. And the markets have never been more challenging for a variety of reasons. There's a lot of computerization. There's all kinds of things happening. You know, people say Wall Street is rigged. It is or it isn't. We've got politics. We've got everything under the sun you can possibly imagine. People say your options aren't great. I disagree with that. I think your options are actually better than they've ever been. Which companies do you know to buy and when? That's always the real test. People tell you it doesn't matter, but I say it matters more than ever. Because you really do want to find great companies with great managers, with great products that are capable of changing the world. Fair statement? Fair statement. It's not how you make money when the markets are going up and things are easy. It's how you continue to build wealth when they've gone absolutely nuts. Has anybody felt nuts lately? I mean, we're among friends. Has anybody felt nuts lately? Really, seriously. Anybody want to put up both hands? I mean, really? Yeah, exactly. I mean, it's just, and I've been doing this 45 years, but that's the stuff nobody talks about and everybody should talk about. Because for 45 years of my life, I began trading when I was 15 years old. I've been laser focused on what it takes to get ahead in the market. How do you find the best ways to invest? Figuring out which companies to buy, the tactics you need to succeed through thick and thin. This has been my life's work, and I've come to one inescapable conclusion in all of that time. And it's that anybody, and I mean anybody in this room, anybody who wants to put in a little bit of effort can be wildly successful in the financial markets. And I mean it. I did it. And I'm not the smartest guy in the room. That's you guys, because you're here to learn. Not just from me, from everybody, all the experts, all the sponsors who are going to be here for the next few days. That's why the Money Show is what it is because we can all come into a forum like this and learn. The principles are the same. And you can make a change really for one of two reasons. This is important. You can make a change because you want to master your money and you're tired of table scraps, or you can make a change because you've reached a decision point when you know you've got to make a change, you feel it, but you want to break through the uncertainty that's holding you back. Has anybody felt like that before? I mean, yeah, me too, exactly. And I do this professionally. Every day, I wonder, am I doing the right thing? But if you're ready to do that in 2025, and this gets really to the guts of what I want to talk about today, you're going to love what I have to say. If you are not ready to make a decision, if you haven't reached that threshold, you're going to hate every minute of it. Fair statement? A lot of uncertain looks out there. What does Keith mean? I don't know. There's not any middle ground. Either you're in it to win or you're playing not to lose. There's no middle ground. And it's very important mentally this year that you sort that out. If you take away one thing today, one thing from hearing me speak, I want you to take it out that you're in to win. Everybody say it with me. I am in to, because otherwise, why are we doing this, right? Do you play to get mediocre returns? Do you play to invest just because? No, you invest because you want to meet specific goals in your life, right? Yes, no? Does anybody invest just for the hell of it? I knew a guy once who did that, and he didn't last very long. But getting ahead in 2025 is going to come down to three simple things, and they're very counterintuitive. They're big picture items, but I really mean this. Number one, you're going to have to make more concentrated bets than you've ever made in your life. It's going to be unusual. It's going to be uncomfortable. But I really want you to think about this. I don't know of a single building that is named after a diversifier. Do you? I know plenty of buildings that are named after people who are big winners and concentrators. Number two, you got to play to win while everybody else thinks about playing not to lose. And that is a big opportunity for everybody in this room because you now have a mental edge. If you think like a professional and you're in to win, you now have the upper hand by default because you're playing to win. You need to unlearn catastrophic fear-based behaviors and replace those with reward-oriented choices. Now, why would I say these things? I'd say these things because I believe we're living at one of the most exciting times in human history, at least from an investing standpoint. We stand on the cusp of a sixth wave of innovation that has never been seen in recorded human history. We had water-powered textiles, steam, electricity, pyrotechnics, software, digital networks, the network itself, the internet. Now we're talking about AI. Now we're talking about big data. Now we're talking about doing things and finding relationships that were previously undiscoverable. That is going to usher in unprecedented profitability. In fact, I stopped CNBC cold when I said I think we're looking at more profits in the next 10 years than the last 50 combined. Stopped Kelly Evans cold. What are you talking about? But AI itself, not just a technology, but it's the technology, may be the single biggest investing opportunity in recorded human history. Every business, from your local car shop to your grocer, will adapt, adopt, or die. And the same is true for investors. Either we're going to get it or we're not. Those who do are going to move on down the road, but the thing we want to focus on is the explosion in earnings, the explosion in revenue, the explosion in what these companies do with that information. Even if they're not in the tech business, it's how they use it and absorb it that's going to make all the difference. If there's one irrefutable lesson in all of this, it's that missing opportunity, this year especially, is going to be more expensive than trying to avoid risks you cannot control. And we use something called the 5Ds. We call this the painted picture. Every single year we line up big thematic shifts in our world. These are structural shifts. There's 5 of them. And digitalization is now the largest of all of them. In fact, it encompasses everything. Defense, dislocation, distribution. I mean, it's all there. And it's now so pervasive that we have to go through it. Now, many folks think they've got this covered. And if you're investing in SPY, for example, popular ETF, how many people own SPY or invest in an index? Excellent. Nothing wrong with that. Over the last 20 years, through October, it was 653%. Excellent. Absolutely excellent. But the problem is, this is where most investors wind up. They throw pasta against the wall and they want to see what sticks. And why? Is because too much diversification now, we know, is holding you back. Being over-diversified is a lesson in mediocrity. You can't be better than the market if you are the market. But the problem isn't diversification. I mean, diversification fails when you need it the most. So the theory itself still is sound, but the way it works in today's markets is very different because of all the computerization. I mean, that doesn't look diversified to me. Does it look diversified to you guys? Does it? I mean, this is a tough slide, particularly if you grew up diversifying. I mean, how many people grew up being taught diversification was the way to go? Exactly, me too. I mean, when I started my career at Wilshire Associates in the 80s, that was exactly the lesson, was you will diversify. And we constructed everything. We built half the software that Wall Street uses today to help allocate these portfolios. But what we realized was that something's changing, computerization is changing, the options are changing, the rise of passive investing all makes that argument harder. And in fact, today, you're over-diversified if you've got more than 20 to 25 stocks. This is the concentration part I'm talking about. So diversification itself isn't the problem. It really isn't. It's a good thing. The problem is most investors don't own enough of the right stocks. So when a stock like Palantir comes along, what do you do with it? They say, oh, I got to diversify. I'm going to do this. I saw a position portfolio the other day that was 78 positions, not one of which was more than 2%. I mean, how are you going to do that? On the other hand, I saw a portfolio that was 78 positions, 76 of which were 2%, and 2 were Palantir and NVIDIA, and that portfolio had done very well, right? So if you get the right stocks, you start thinking about the fact that NVIDIA is up 121,000%, that's the kind of thing where you can invest $1,000 and say, how big a deal is it? Well, even just $1,000 in these companies is a life-changing amount of wealth if you have the time and the patience to stomach the volatility that comes with owning it, right? Palantir by itself, people always tell me, well, I don't have 20 years to wait, Keith. Okay, you got 5. Palantir has returned 1,079% since its IPO on September 30th, 2020. 1,079%. That's astonishing. There are 10 to 15 Palantirs out there right now. Think about that for a minute. There's an opportunity every single day if you know where to look and what to look for. It doesn't matter whether you're an investor or a trader. This isn't rocket science. Where do we go from here? That's the wrong question. Let me tell you why it's the wrong question. What you want to be asking, if you're thinking like a winner, is not where do the markets go. What you want to be thinking about is which companies can succeed despite it all. And you can define it however you want. You can define it as politics, it as tariffs, it as inflation, it as banking, it as, the Mongolian zlots, the price of green doors in China, Elon Musk's rocket. I mean, who cares? As long as you're thinking like a winner, which companies can go through it all? That's really the secret to investing in today's markets. Perspective is another big one. I run into this a lot. And you've seen me on television a lot. People say, well, the market's up 400 points, it's down 400 points. And I'm just like, phew. Because I learned a long time ago that if you have the right perspective, if I'm thinking daily, if I have the attention span of a gnat, I'm going to get very worried whether it's up and down. But if I have the right indicators, if I have the right schooling, I have the right thought, I have the right companies, I'm lined up with my 5 Ds, I can be years or decades. Now suddenly I can sleep at night and I have a smoother trajectory. Does that make sense? Yes, no? Fair enough? Again, this is a hard lesson. I mean, I've been doing this, I lived it. But the conclusion is that there's more bulls and bears over time. So it makes sense to invest with that possibility in mind. The key to owning great stocks, and this is paraphrasing the legendary Peter Lynch, is not to get scared out of them. How many people have been scared out of a stock only to watch it take off without them? How many people have been scared into a stock thinking they're going to miss it because it runs and then it tanks? How many people want to put up both hands because they did it a lot? Exactly. I see one person back there going, yeah, that's me. I'm right there with you. Right there with you. I've made every mistake you can make, but that's the point, is we all do that. And if you're in this game and you're investing long enough, you're going to do it. But mistakes are tuition, especially when you know the numbers. You got to learn to trust them. Remember, long waves of innovation. This stuff, no matter what happens with the Fed, no matter what happens with Wall Street, no matter where the markets go next, nobody's getting rid of AI. Palantir isn't going to slow down because suddenly something changes at the Fed. No way. I mean, how many people have seen Alex Karp's interview here recently? Brilliant. And if you have not read his new book, I encourage you, in fact, I would consider it must-read book. If you're going to read one book this year, read that one. Alex Karp's new book, order it, it's coming up. Technology is still very much the place to be. AI is going to fundamentally change our world. And AI by itself, never mind all of the other uses, is a trillion-dollar proposition, multi-trillion-dollar proposition every single year. There's a reason we stick to large caps too. Now, small caps are great, and in fact, there's a lot of great small caps out there. Palantir was a small cap at one point, but you've got to pick very carefully. You got to make sure you're lined up with these big 5 Ds or whatever broad trends you're thinking about. You have to understand how it fits in your portfolio. I personally prefer large caps because they got big fortress-like balance sheets. They've got the wherewithal and the global footprint to survive the volatility that bothers me. And occasionally I'll go hunting for very, very small caps. Small stocks, really again, the lesson here is do your homework. The cost of guessing, we don't do that. There was a staggering statistic that showed up last year. People think they can guess the markets. How many people have tried to guess the market and got it right? How many people have tried to guess the market and got it wrong? How many people have done it a lot and got it wrong a lot? Right? I mean, I've been doing this 45 years. Mistakes are inevitable. But the point is, if you're guessing, you're introducing timing, you're introducing uncertainty, you're better off at the tables out here, right? But if you invest in great companies with great returns, great products, now you're talking about certainty. You have the odds, not the house. And finally, politics, that's a lot. That comes up a lot, especially in the television environment. Well, what do you think about the president? What do you think about this? What do you think? You know what? As an investor, the markets don't care. They don't. And history proves it. Doesn't matter which side of the fence you're on. Doesn't matter whether you agree or not. Doesn't matter whether you're red or blue. Doesn't matter how you think. The markets reward innovation. The markets reward patience, and they reward diligence. So, as investors, we have the luxury of taking that hat off. Let everybody else fight it out. We can take an interest in it personally, but from a financial standpoint, I would submit that the markets don't care. Yeah, but. Who wants to go yeah, but? Anybody in here want to go yeah, but? There's got to be at least one yeah, but in here. Okay, one yeah, but. Excellent. Thank you, sir. This is the point that I always come to. Everybody says the markets could go down tomorrow. This PE is such and such. Fine. Since 1871, the markets have spent 83 to 85% of their time at or within all-time highs, within 10% of all-time highs. Think about that for a second. Since 1871, you're setting roughly one new high, all-time high, a month. 1,300 new highs. So it makes sense to bet that things are going to go up, the sun's going to come out, and you're going to have a great picnic, then worry about the thunderclouds on the horizon and the sun setting later today. So it never feels like a good time to invest, but history shows that it almost always is. The markets are adapting, and it's important that you adapt your thinking, just like I've adapted mine, because that's the path forward. That's how we're going to do this. And contrary to what investors think, this year especially, you want to find those 2, 3, 4, 5 opportunities and really focus on them, because that concentration is what's going to help you win. It's going to help you overcome having the diversification that may be holding you back. Just adding that little extra edge is like tapping on that gas pedal just a little bit more to get the higher return. So that reminds me, people ask me all the time if stuff like this works. As of tomorrow, the SEC blinders that have kept me quiet for the last 3 years will come off. I will have some information for anybody who's interested about discussions we're having related to an ETF that does all of what I'm talking about. So anyway, I'm not here to sell you anything. I'm here to inform, but some of you have asked me about that, so I thought I'd throw it in. And with that, I'm between you and the next speaker, so I'll be happy to take questions. Thank you very much. I appreciate it. Thank you.
There's microphones in the middle there. We have one on each side. If you raise your hand, we can try and get to the others, but it's definitely as easiest if you step up to the microphone. That way we can make sure Keith hears your questions as well.
I don't bite. Yes, sir.
What should you do about financial, sort of media financial? I mean, every day they headlines, they affect, investor confidence.
So the question is, what do you do about media headlines? Because they throw these headlines out every single day and they infect, and probably dissuade a lot of investor confidence. Fair statement? And I'm standing here, I've got 3,000 plus primetime media appearances under my belt at this point. And I try very hard not to be the confusing guy. But it's a very valid point. Because if you think about it from an investor, what are you interested in? You're interested in the great stocks, funds, and companies you own, right? Yes? I better see 100% of the heads here. Is that what you're interested in? Yes? What's the media interested in? Getting you to watch their program. What are the clickbait artists interested in? Selling you something. So my point is, I'm going to talk about this tomorrow with the 5 with Fitz, how I put this together. It's important, the first thing you can do, the most important thing you can do every day is turn the volume off. It's a great substitute for Animal Planet. Even if I'm on it. Seriously, all joking aside, what you want to do is not listen to the headlines themselves. What you want to do, to your point, is listen to the headlines and think about how they impact the stocks you own. What's the broad perspective on Apple? What does this really mean for Tesla? Not Musk himself. What does it mean for Palantir when CEO Alice Karp says this? Those are the way you watch the media. So you watch the news, take it in, but don't just blindly follow it. Don't jump, don't go, because that's what they want. Every professional trader out there is banking on you having a knee-jerk reaction. So the other thing to think about is that guys like me, when we're watching the news, what I'm watching is not even the news. What I'm watching is what I think is going to be the reaction from every retail investor who doesn't know how to watch the news, watch the news. So if everybody goes long, guess what I'm going to do? If everybody goes short, guess what I'm going to do? I mean, if they all sell and they're all running for the exits, what's the first thing you should be thinking about? Going shopping. Data shows that 80 to 85% of all retail investors make exactly the right decision at precisely the wrong time. They buy when they should be selling and they sell when they should be buying. Why? Because they're watching the dang news. Big picture. Remember that graph. Days, years, decades. And the news will suddenly not be a confidence issue. There'll be something you can look at as a winner and say, what can I do with this information? Not how do I react to it? I find that helps my confidence quite a bit. Does that make sense? Perfect. Next question. Sir. Oh.
I have a quick question.
Uh-oh. Kim's got a question. There we go.
Sorry about that. Starlink.
Starlink.
You know, Musk is a disruptor. We know that.
Sure.
And Musk has just cut deals with the fact that we are going to go directly from our cell phones to Starlink. There will be no intermediary. How is that going to change Verizon, Apple?
That is a really insightful question. I have some firsthand experience about that. Every once in a while, the topic of discovery or disruption comes up, right? I personally watched a village in China, which, by the way, had 2.5 million people. They do villages differently in China. It went directly from no phones to cell phones. There was no landlines at all installed. This was a village that was moved as the Yangtze River came up when they had the Three Gorges Dam. And one day, suddenly, the Chinese government said, okay, everybody's moving. We don't have water, we don't have communications, we don't have this. Well, the Chinese government on the other side of the river built 1.5 million people's homes, and they went straight to cell phones. Here you go. Communication was taken care of. Now Musk is getting ready to do the same thing with regard to satellite. So I think Verizon has serious challenges in front of it. I think every cell phone provider has serious challenges in front of it. I think Apple is actually going to do very well because Apple's playing the long game. But the small local telecommunications companies, I think they're going to get vaporized because Musk, like him or hate him, that's moot. I mean, get that off the table, right? So to our point about confidence and what we do, I think he's arguably one of the most brilliant CEOs on the planet today. Now, granted, there's days where he makes me absolutely nuts as a stockholder, but great CEOs often do that. Steve Jobs did it. Sir Richard Branson did it. You look at Bill Gates, he did it. I mean, Jeff Bezos, he did it. So that's not the issue. The issue is what does this look like for our investing? And if we go right to satellite, suddenly many of these land-based companies are toast. I think he rewires the electric grid. I mean, I can't wait to see what happens to all these utilities, with regard to the power distribution. In our neighborhood, I mean, we have to pay through the nose to get power. And I cannot wait to the fact when we have our own batteries and we have our own ability to generate it on our property, and we don't have to worry about that. So to me, Kim, that's just an opportunity and a half. If you go to the data that's going to be moving up and down, if you go to the way it's functioning, if you go to how it gets there, those are the things that are going to make our world work. They're where we're going, not where we've been. Does that make sense? Yes. Does that make sense? Always go to where the world's going, not where it's been. But you have to look at the trends. You got to look at the big themes, those 5 Ds. Yep, you can get Starlink. Yeah, when I first started going on right. Well, or California wildfires. I mean, hopefully everybody in here came through that okay. I mean, that was horrific. That's where I began my career. That's a neighborhood I know well. Rode my motorcycle through there all the time. But, he showed up and went, fine. Instant cell phone transmission at no cost. And, the government's standing there going, well, wait a minute. Shouldn't we have to regulate that or shouldn't we have to do this? I mean, those are all big picture questions. I'm not smart enough to figure that out. But the point is, at a flip of a switch, he fixed it. That's astonishing. I would love to get a hand on that if it goes public. Yeah. Kim's trying to find out who's going to take it public. Anyway, I'm probably on time. Thank you so very much to everybody. I will be here the whole show. Please introduce yourself. Thank you.